First off, I want to apologize that the backdrop that I'm in looks like I lost all my money in crypto and had to downsize. I can assure you only half of that is true.
We're all half the man or woman that we once were. I mean, the world changes very rapidly. It could change once again. You know, it's hard to predict the price movements. But having said that, I've experienced, this is my 8th bear market. And so I'm here to tell your viewers and listeners they'll survive. But I think what you have to always do is keep a little powder dry, because when the markets get lean, they get lean in a hurry. And they always look the worst before they start turning. You know, I'm watching full-on capitulation in certain sectors of the economy. And people said, okay, well, that's it. You know, there'll be no more crypto. Or, you know, in March of 2000, Scott, Amazon's going out of business. You know, it went from 116 to 6. And so therefore it has to be completely going out of business. But I remember what Jeff Bezos said at the 20th anniversary of the public offering. During that period of time, revenues were going up, customer base was going up, stock market was going down. So, you know, ultimately, the markets long-term are a weighing machine. In the short term, they're a voting machine. They can get very discombobulated in the beginning, but we'll see. But I have no doubt you'll be in a mansion before too long.
From the bottom, ain't no half-stepping. I'm the dog, I made it through so they don't ask questions. Long Beach, and it ain't no half-repping. Once a dog, always a dog, so they don't ask questions.
Anthony Scaramucci is an American entrepreneur, author, podcaster, and founding member of Skybridge Capital. He is the chairman of SALT, a global thought leadership and networking forum encompassing finance, technology, and geopolitics. He also served as White House communications director under U.S. President Trump. He's also a father and a husband. So, Mr. Mooch, thank you so much for coming on today. I really appreciate your time.
It's great to be here.
First question, my friend, is did you really buy the Batmobile one time?
I did. I'm sorry. You did your research well. I actually, I owned the, I mean, it's probably politically incorrect to say this, but if you go to chickslovethecar.com, chicks love the car. I'm probably not even allowed to say that anymore, but you'll see a picture of it. It was from Batman Returns. It was Michael Keaton played Batman. And of course, Danny DeVito was the Penguin and Michelle Pfeiffer was the Catwoman. The car was spectacular and it wasn't road ready or anything like that. It was very low to the ground. So I did a lot of scraping when I was driving it, but it had a propane tank on the back that shot the fire out. Okay. And the car was actually built on a Ford F-150 frame. And so, you know, I grew up in a family that loves cars. My uncle was a motorcycle enthusiast. He had a motorcycle shop in the town that I grew up in. And I will say this to you, that car was some of the most fun I've had in my life. I dressed up on Halloween once, was in the Batmobile, driving around in the goddamn car in my hometown, you know. Of course, there was no license plate. There was no license plate on the car, but the cops got a kick out of it. They didn't give me any problem, you know.
Man, that's so badass.
That car is actually now in a museum. It's in a museum in Abu Dhabi. It was bought by the museum curator from me and my cousin. And we made the decision to sell it because we thought that it needed to be on public display somewhere. We used to put it at the Javits Center for the car shows. And I'm like, this is really, you know, people need to see this car. It's just not something that, you know, him and I are like hanging out in it in the garage that we rented. It's not benefiting anybody. So we sold it to a museum.
That's so cool. Do you have a favorite Batmobile now?
Of course. I mean, I'm going to date myself. Okay. My favorite Batmobile is the one that Adam West was driving. You know, of course, the original 1966 Batmobile, which was on a Ford Futurama frame. And I love that car. And I almost bought one of them. Okay. There's several of those. But we bought the Batman Returns one. I thought it would be more of a reserve of value because there were so few of the Batman Returns. There were only 3 of those cars. I think there were 40 of the 1960 cars that were made for that television show.
Wow, that's cool, man.
Yeah, I know a lot about cars. I love cars. Yeah, look, I'm a nouveau riche Italian from Long Island. I grew up in a blue collar family, so I know a lot about cars.
Well, what do you drive now?
I got a lot of cars. I've got a Lamborghini, I've got a Rolls Royce. I mean, I do have a lot of cars. I have a Mercedes. I mean, listen, don't judge me. When you grow up with no money, you idealize your life. Like, if I can make it in America or make it in New York someday, I'd like to have some nice cars. So I do have a couple nice cars.
So tell me about your thoughts on the current market conditions, both in TradFi and in crypto. Where do you see us going for the rest of the year?
Well, listen, I mean, the markets have had the worst 6 months since 1970. If you measure the markets going back 52 years, the forward 6 months in 1970, the markets were plus 27%. I think the markets are going to rally into the back half of the year. I think they probably overshot in the first half of the year in terms of the negativity. I think that, unfortunately, we're probably already in a recession. And so what ends up happening is, when you go into a recession, I think the Fed fears the recession more than it fears inflation. And so they're going to start cutting guidance, I think, even as early as September or October. The market will rally into that. There'll be more than just a quote unquote bear market relief rally. There'll be like people getting ready for the next bullish cycle. I think what I don't know the answer to, and obviously I don't know the answer to that either, I'm speculating, but I would say, are the inflation data. I've been wrong on the inflation data. If you had asked me when the Fed was saying that the inflation is transitory, that I believe that was the case, I would have said yes. If you ask me today, is the inflation systemic? Are we in full-on 1970 style secular inflation? I still don't believe that. The economic data is not suggesting that. If you just look at where the tips are, the inflation-protected treasuries, they're not there. If you look at where the 10-year rolled in the last 2 weeks, 10 years rolling back into the 250s, down from 3%. So we're not there. If you look at gas prices, we've had 22 straight days of gas price declines. And if you are a rationalist, and here's the thing I would tell your viewers and listeners, none of us are rationalists. All of us are emotional. So don't even pretend, but let's just pretend for 1 minute that you and I were computers and we were rationalists. You would then step back from the data and say, okay, what is happening? And then I think what's happening is you have a supply side inflation, meaning the supply chain got disrupted by COVID-19, as a result of which you've got a shortage in supplies at the same time that you inducted all of this money into the capital stream to try to help people during COVID-19. The government probably spent $6 trillion, some of it in debt spending, giving people checks, purchase protection, payroll protection, whatever they were calling it. And some of it is just in interest rate declines and buying up securities in the market to try to improve liquidity in the market. And so if you put 42% more dollars into the system, and that's more or less what we did over the last 2 years, and then you have a supply chain that's constraining supply, more money in the system, less supply, prices are going to go up. So question is that sustainable? I don't believe it is. The Fed is now trying to slow that down, jawboning the interest rates, knock the wind out of the market. That decelerates the wealth effect. It lowers consumption. I think we're already in a recession. I think the data will prove that by the end of the year. You'll have 2 successive quarters of negative growth, and the Fed is going to have to switch its policy stance. And so I believe that they will. Just the question is, how long is the inflation going to last? I thought it would have already abated. And so maybe it rolls by the first quarter of 2023. We get back to the fourth quarter of 2019, sometime late 2023. And so we'll have had a 4-year disruption in economic activity and our growth pattern as a result of COVID-19 and our policy decisions and the inflation and all that stuff. But sometime in late 2023, we'll be looking back and saying, wow, that was a really rough time for everybody, but the economy's back in equipoise.
What are your thoughts on the Federal Reserve and their reactions generally? They seem to always overreact in one direction and then have to compensate in another.
Yeah. Well, one of the things I learned in Washington, my 11 disastrous days, is that these jobs are wickedly hard. It's very easy to armchair from the side.
Mhm.
I would tell people listening to your show, if you read the presidential daily brief, if you have if you've got the national security clearance, or you're actually reading the brief and you're looking at what's going on around the world and what's on the president's desk, I think it's a game changing, it's a life changing thing to have happen to you, because if it's on the president's desk, it means that there were 5,000 people in the government that couldn't make the decision. So now this is a very difficult decision. It's a bad outcome or a horrific outcome, and you're not sure what to do. It's very vexing. And then when you read the brief, there's no certainties in the brief either. So you have 85% chance of this, 35% chance of that. The CIA thinks this, but we're not sure. Remember, there was only a 65% probability that Osama bin Laden was actually in that house in Abbottabad. And why am I bringing that up? Because I think it's the same thing with the Federal Reserve. You switch over, you move down the street, you go to the Federal Reserve. I think the chairman is dealing with the same sorts of unknowns. You have known unknowns. And as Rumsfeld would say, you have unknown unknowns. And so he's sitting there and he only has this blunt instrument of calibration. He can go up and down in interest rates, and he can try to influence the economy with that, or we could do quantitative easing, which is a form of interest rate influence as well, because you're just buying later stages of the yield curve. So to me, I think it's impossible. It's an impossible task. We consider a Monday morning quarterback and say, oh, he did a terrible job. He should have gotten ahead of it. But I think there were reasons why he didn't get ahead of it. He was so worried about the standstill in the economy. And let's take everybody back. I mean, we were in our houses. We were told, don't leave the house, and wear gloves and a face mask if you got to go buy food, and leave the food outside the door, and wash the food before you bring it in. We still don't know a lot about this virus, and so I think it's very hard to be overly critical of him or the team. And so by and large, I think they're well-intentioned. They're trying to do a good job. I think the moves he's making right now are necessary. If you're asking me to be a Monday morning quarterback, I think he needed to be more aggressive. If he dropped 100 basis points on the market last time, I think that would have sent a message to people, a better message, sharper message. You could have had more of a rally in markets if he did that.
Anthony, I think that's a really great perspective, because we're so used to finger wagging in this world where we have social media at our fingertips. And so I think your perspective of what it's like to be in the White House, and
I'm a lifelong finger wagger. By the way, I'm not sitting. I hope I'm not coming across as sanctimonious to anybody.
No, not at all.
I've been humbled by life, and I've been humbled by markets. But I remember leaving the White House, and I was blown out the front door. I was excoriated in the press, ripped up by the late night comedians. All of that was horrifying in some ways, and also, clarifying. And I remember writing some stuff down because I wanted to remember things, and I wanted to write down some of my observations. And one of my observations was, wow. These jobs are way harder than people think, and especially the presidency. The presidency, Trump didn't have the intellectual curiosity to really want to be president. He loved the attention, but he wasn't doing the homework necessary to be president. You could hate Barack Obama or hate George Bush, but they were at least doing the homework. They were reading the briefing books. They were following what was going on. They were trying to come up with a good decision. You see what I mean? So these jobs are really hard, Scott. I wouldn't, so I don't want to be that guy anymore that is the finger wagger. I want to explain to people jobs are really hard. People are trying to do the best that they can in the circumstances. They'll get some things right. They'll get some things wrong, and then they'll get really lucky. And sometimes history makes the person, and they're sitting in the seat at the right time when good things happen, and they get the accolades.
Let's switch to crypto really quick. Give me your opinion about Three Arrows Capital and the situation around leverage in crypto. We seem to have had a domino effect around the sector, and now it's hard to go a day without a headline of some other exchange going down, or former CeFi protocol, failing. Is this a wake up for crypto? What are your thoughts around the leverage situation that we're, hopefully done going through now?
It feels like there was fraud there, and I don't want to I'm not a DA or a prosecutor, but it feels like they were double collateralizing. And I think they were signaling to different people they were borrowing money from that they had collateral that they didn't have. And so it's almost like Bernie Madoff got married to John Merriweather from Long-Term Capital Management. So who the hell is that? Because your viewers are probably young. In 1998, 24 short years ago, a group of people at Long-Term Capital Management in Connecticut almost took out the markets, lights out. And they seized the markets. They had $1.25 billion of assets under management, but they had locked up $1.5 trillion worth of derivatives, and the markets were going against them, and the whole market was seizing it. It forced the Federal Reserve in 1998 to intervene, and it made the banks step in and buy out Long-Term Capital Management. So it was a private buyout, and then the Fed cut rates and the market rallied. But why am I bringing that up? Because there are no new mistakes, Scott, no new mistakes. Everyone's making the same old mistakes. I overbelieve in myself. I'm overconfident in my positions. Bitcoin's at 60. Could it trade to 50? Sure. Could it go to 45 temporarily? Yes. Is it going to 24,000? No, it's never going to 24,000. So I'm going to create a stable coin and use Bitcoin as collateral. I'm going to call that Terra Luna. I'm going to make my borrowing decisions based on a floor in my mind, not a floor based on what could happen in the markets, of what I'm going to do with my investment decisions. And so people have done that throughout time. We saw that in 2000, March of 2000, the entire NASDAQ imploded. It went from 5,400 to 2,300. We're watching that in crypto right now. This is the same wreckage, the same fire that took place in March of 2000. Now, here's the problem. If you look at what's happening right now and you say, okay, I got burnt at this hot stove, I'm never touching this again. And a lot of people will go on to say that. They may miss the biggest investment opportunity of their lives. If you walked away from Amazon, when Amazon went from $116 to $6 in the year 2000, if you walked away from Amazon, a $10,000 investment in Amazon on its IPO is worth $14 million today. If you went to the peak 6-8 months ago, it was 22 million. And so right now it's still worth 14 million, a $10,000 investment. So if you walked away from that, you missed a generational opportunity to transform your life and transform your world. And so I would tell people, don't step out of these new technologies. I would say, be patient, stay in them. The excesses that we just witnessed have burnt a lot of people. Hopefully that will lead to less leverage in the system going forward. But the technologies are there. The applications are there. The use cases are growing. And this is a world that I want to be in. Even if I had to shed some of my assets, sell some of my cars, no problem. I'm happy to do that. I need to stay in this because I think it's super important to be a part of it.
How do you stay level-headed during times of uncertainty? I mean, you seem like very reassured, and that helps me as someone who feels like I need to reassure myself of the technology. So what's the process for you?
1998, I'm 58. I'm 58. This is my 8th bear market. So in 1998, when I was 34, 24 years ago, perhaps I was showing no signs of panic, but I was panicked. And I was a younger man who was making assumptions about the market and making assumptions about my career that I thought were going to pan out, and they weren't panning out because of the corrective forces of the market. And so what did that cause me to do? It caused me to tighten up my risk parameters. It caused me to use less leverage. If I didn't have the painful panicking experience of 1998, I wouldn't have been prepared for 2008. 2008, the global financial crisis took a lot of my friends to the cleaners. I was able to stay in business, and I was able to grow my business and reformat my business 14 years ago. 2022, It's a lot like 2008. It's a lot like 2000, the year 2000. Our business has shrunk like many people's businesses, but I have absolutely no leverage in the business. And I've had 33 years of making decent money on Wall Street. And so I have some assets and I can stay patient. I have some level of financial independence. I think it makes you saner and it provides you with a tighter perspective. But no, I mean, I think people panic for different reasons. They panic when they have high expectations that go the wrong way. I think my expectations have been tempered by getting my ass kicked for 34 years. I'm in the business 34 years, gotten my ass kicked the whole time. So this is not something that I'm not used to.
It seems like a lot of issues that happen with, whether it's a traditional market or a crypto market, has to do with leverage. So why do you think people are so attracted to leverage, even though ultimately it seems to cause a lot of problems?
For all the obvious reasons. It causes problems on the way down, but it's an unbelievable wealth creator on the way up. Most of the great wealth in our society, particularly if the people are starting from zero, it has to come from leverage. I mean, just think of for a moment, you're buying your house, you're a first-time house owner. Maybe you grew up in a blue-collar family like me. You're going to buy your house. I couldn't afford my first house. I may have paid cash for my last one, but I can't tell you that I could have afforded my first one. And so I bought the house, but I had to borrow money from somebody to buy the house. And then they set up a payment plan and I could pay it off either quickly if I was making more money, or maybe it'd take me 30 years to pay it off. But wealth creation in the country usually comes from leverage. So there are positives to leverage. The problem when you're leveraging highly volatile assets is that you get hit and the leverage hurts you the most when you're in your worst period of time, and it forces your hand. And so I don't lever my financial assets. I don't lever my investment assets. I will always make less than the people that are levered, but I will also lose less than them in bad times. And I think my message to your listeners and viewers is stay in the game. Don't get knocked out of the game. And by the way, it's not the things that you think will go wrong that knock you out of the game, because most people will prepare themselves for the things they think will go wrong. It's the things you think with absolute certainty that will never happen, that happen, that knock you out of the game. And I'm here to tell your viewers and listeners, anything that you think cannot happen will happen. Okay. And if you think like that, it's good defensive driving. It's good investment defensive driving, if you will. And so when the Terra Luna guys were saying, well, we're gonna back this stable coin with this very unstable asset known as Bitcoin, which any period of time is trading with a 60 vol, an 80 vol, or a few months back, a 100 vol. Excuse me, what are you doing? You have something called a stable coin that you're backing with the collateral that has a 100 vol on it. Okay, well, I'm just going to let you know that's not going to hold. Okay, someone will break that on you. And so, this was a conversation that I had, and many people, our economic research team, said, geez, we're very sorry. If someone says to you, look, I'm going to lend you 20% on your Bitcoin, put it in my care, move it over here, and I'm going to give you 20% on it. Okay, the interest rates, the risk-free rate from the Treasury is 2.25. Maybe it went to 3. Now it's at 250. Wait. You're going to give me 8 times that? Okay, that smells like dog shit to somebody like me, right? So I didn't do any of that. You understand what I'm saying? So when that imploded, it's not a surprise to me. Okay, what I think surprised me, and although I shouldn't say that because I should never be surprised, is Bitcoin trading down through where I thought were normal price patterns of stability. And that's the overreaction of leverage. Now, Bitcoin could leg down again. Maybe Bitcoin's going to 10,000. I don't know. But Bitcoin's here to stay. I do know that because like Bezos, I'm watching the wallet growth. I'm watching the use cases. I'm watching the applications. And I'm like, Kathy Wood's going to be right. Bitcoin's going to trade at $500,000 a coin someday. And people are going to be like, why was I not buying it. I know it went from 60 to 20, but any point on the spectrum, I believe you're going to make money. And I would say to you, if you hold it for 4 years, I think we've proven since 2009, if you hold this asset for 4 years, you end up making money. So that's me. Now, I could be wrong. So if I am wrong, I would tell your listeners and viewers, size it appropriately. If you have 1% of your assets in Bitcoin, and so let's say Michael Saylor and I are wrong, it trades to zero. Warren Buffett is correct. Okay. That could happen because what I just said is anything you think can happen, can happen. So now where are you? Well, I'm okay. And your clients or your people listening should be okay too, because they're sized appropriately. Okay. But listen, if I'm right and you have 1% of your assets in Bitcoin, and all of a sudden, because we're right, you have 10% of your assets in Bitcoin, not because you bought it anymore, just because it went up, you'll be happy. This is a technological transformation that's happening right now as you and I are speaking, and I don't want to miss it. And, I read the Wall Street Journal this morning where they're advocating for a Bitcoin ETF. And I think Gary Gensler's in regulatory overreach at this moment. And I'm like, wow, imagine that, the Wall Street Journal. Imagine 5 years ago, the Wall Street Journal actually arguing for a Bitcoin cash ETF. But yet here we are. And 5 years ago was 2017. Bitcoin was at 20,000 and it went to 3,000 and it pushed back through. Now we're back at 20,000. We could go lower, but this is pretty consistent with the cycles of Bitcoin.
Speaking of the Bitcoin ETF, you did seem to have a few hours lead on the Grayscale lawsuit. You tweeted out, some good news is coming, and Grayscale is suing the SEC to try and turn GBTC into an ETF. I keep telling people that this is exactly how Canada got our first Bitcoin ETF. What's your timeline for a resolution on this, and how do you see it playing out?
Good question. I would say to you, the lawsuit has merit. And so let me step back for people, not that I want to give them a legal education on your podcast, but let me just explain this to you. If I am a regulator and I make a decision, you're going to have a Bitcoin futures ETF. But you're not going to have a cash ETF. Okay. I have to be able to explain that to a judge. If you now bring a lawsuit against me, there are regulations here in the United States that say the regulator cannot be arbitrary and capricious in their decision-making related to the regulation. So forcing a lawsuit, now the SEC has to go before a judge and say, well, this is okay. Here are the reasons why. This is not okay. Here are the reasons why. And I think there's going to be a lot of hypocrisy and logical inconsistencies with what they're saying, because they're both tied to cash Bitcoin, right? You know that, I know that. So therefore, how could there really be that big of a difference? So I think what's going to end up happening is a coin toss of whether or not the SEC can win that lawsuit. Okay, so what I think ends up happening is what you said in Canada. We move towards the lawsuit, and then the SEC takes an off-ramp and they approve one of these Bitcoin ETFs. And so you will get a Bitcoin ETF in the United States because the system still, from a judicial perspective, is fair, I think, and still reasonably balanced. So, but maybe I'm wrong. But I made that tweet, and then I listed all the reasons why I tweeted that. I put the tweet up, and then I hear the list. I think the Fed has to change sentiment. I think as you go into a recession, the Fed has to change sentiment. I think the incremental buyer is moving back into the market. I also think the supply chain disruption will end alongside of the remnants of the pandemic. The pandemic becomes endemic. And yes, we're going to deal with COVID the rest of our lives. Unfortunately, my children got COVID over the weekend, last weekend, alongside of my wife. I had it several months back. They avoided it, thankfully. And it's rough. It's still a very tough virus. It's a bad cold now. It's not a death spiral, particularly for younger people, but it's a rough disease. And we're going to deal with it the way we deal with the common cold or the Spanish influenza and the remnants of it 100 years later as it's mutating. But we'll deal with it. The supply chain will get corrected. The political system is about to be upheaved again because the midterm elections, Donald Trump was a threat to democracy, but look what these guys are doing. They're not handling it well. They got a 38, 39% approval rating. So there will be a sentiment change. They'll likely lose the House of Representatives. That will be good for the markets because the markets like that. The markets don't like one party in charge. So all of these things to me are long-term good for the markets. Okay. Now, here's what will happen. We'll get to a higher level of markets and people start buying into that and think that's going to be stable sediment, but it's not. Something will happen and the markets will turn over. That's what happens. Hey, Scott, go take a look at the moon. The moon's on a 28-day cycle. The earth is on a 4-season cycle. It's rotating around the sun. So you're going to tell me that the human being is going to avoid the cyclicality of life or markets or political cycles? We're in a political cycle where the DAs have decided that they're going to offer leniency and laxity to criminals. So now the inner cities are rife with crime. So the people are going to be upset with that. And so they're going to eventually put DAs in. They're going to get tough on crime. And then the crime's going to go away. And people say, well, there's no crime, so go easier on the criminals. Don't and then the cycle will happen again.
Round and round we go.
That's life, though. That's life. And so to me, I want people to have perspective. I want them to be measured. I don't want them levered, especially in an asset like Bitcoin. Bitcoin with that level of volatility, and by the way, if we're right, it's going to be one of the transformational things. It's going to be the Amazon of the 2022, 2032 period of time. And I don't want you to miss it. But I also don't want you to get shaken out of it or unnerved because there are levered speculators in the market that are wreaking havoc on your position day to day. Everybody is a long-term investor until they have short-term losses. When they have short-term losses, they cut and run on you. I've watched that happen a lot in my career,
Yeah, no doubt. There does seem to be a divide between people who are very focused on Bitcoin and people who are kind of both and into Web3. Why do you think that is, Anthony?
Some of it is emotional. Again, some of it is cult-like where they've bought in. Some of it is the nature of early adopters. Go back. There were ardent people that loved horseless carriages. And there was another group of people who said, that's nonsense. That's a fad. Bill Gates himself said in the mid-90s that the internet is a fad. You could look it up. And by the way, he writes about it in one of his books. And he says, I got it wrong. And so I had to make a reversal and an adjustment. That's normal. I've gotten so many things wrong in my life. I think what makes a strong investor is not getting it wrong, but having the balls to admit that you got it wrong and switching gears to make something better. You know what I mean?
Mm-hmm. So what do you think we can do to bring kind of the hardcore Bitcoiners and bring people who are open to Web3 protocols like Ethereum and Algorand and stuff like that together? Is there something we can do, or is it just going to be a conflict over and over, you think?
It's a good question. I think it's going to take longer than people like, So I don't think that you're going to snap a finger and Ethereum and Algorand and Bitcoin are going to run all of the transactional protocols for our civilization. I don't think that. I just think it's going to take longer than people would like. I want to go back to 1998. It's a seminal year. I want you to imagine that I'm at my fat box computer with my corded mouse. So the mouse isn't like this. It's corded to the computer, and I'm dialing up the internet on my modem below the computer, and it's whirring and burring. And now it's going to take 35 seconds for the landing page to arrive. It's downloading, and there is my AOL. The guy's running. He says, you got mail, and I'm on the computer, right? Now, someone comes from in a time capsule, time travel from 2022, and they open the door, and there I am at my computer, and they say, hey, you see what's going on here? Someday you're going to be talking to Scott McGregor on his podcast, live streaming or recording streaming, and you're going to be in HD, And oh, by the way, you're going to have a flat screen, cordless mouse. And oh, while you're doing that, there'll be 1 billion people streaming 4K video on this thing known as the internet. Okay, so my point is, that happened 24 years, but it happened. And so we can't judge it minute to minute. You could look at Bitcoin and these protocols, and you could look at the use cases and say, yeah, they suck, or some of them are good, some of them suck, but you're not imagining the exponential growth and the transformation. Oh, and I left this out. Let me show you this thing. See what this is? This is a handheld computer that has more computing power than anything that we had taking people to the Apollo space program, landing them on the moon. And it's right here in my pocket, and I can access anything. And I got this too. And this whole world of social media cropped up on the internet that we didn't anticipate in 1998 as well. So when you think of Web3, I don't think people are thinking deep enough or broad enough.
Anthony, I don't want to go too far down the political hole with you, but I would like to get a sense of what it was like to just work in the White House. It's such a legendary place. From the outside here in Canada, we just see it as, very historical. What's it like being inside?
Well, I'll tell you something, and it's humanizing to Trump, okay? Because I want to be fair to him, even though I dislike him and I think he's a systemic threat to our democracy. I was with him at a time when him and I were getting along in the Oval Office, and it was probably my first day there. It was July 21st of 2017, so 5 short years ago, and I was sitting in the Oval Office.
Is that a surreal feeling?
It is, and I'm going to explain to you why. Number one, the Oval Office is way smaller than you think. And there's a plaster of Paris frieze in the Oval Office of the presidential seal on the ceiling in the office. And Trump and I were looking at each other. And I said, Mr. President, I looked up at the seal. I said, Mr. President, let me ask you, we're in the Oval Office. He said, my heart's racing a little bit. Tell me, did your heart race a little bit when you first got behind that desk? And in fairness to Trump, despite all of his bravado and bluster, he looked at me and said, yes. He said, when I got here, I sat behind this desk. I said, Jesus Christ, I'm the president of the United States. I'm sitting in the Oval Office. And then the phone rang. I picked up the phone. It was the White House protocol chief. And he said, Mr. President, I'm just giving you the heads up. The Prime Minister of the United Kingdom arriving at the North Portico at such and such time. You need to be standing there at the North Portico to greet her. And he hung up the phone. He said, Jesus Christ, I'm the president of the United States. And he said, what happened is I went and greeted her at the North Portico. And then what'll happen to you, Anthony, you're going to get so busy that this is going to become an office. And you're going to get so busy. And even though, yes, it's sort of surreal, you're going to get busy and it's going to be, and he was right. He was right. Don't get me wrong. It never loses that wonderful mystery, and it never loses that wonderful sense of history. But when you're in the throes of what's going on, you're working and you're not thinking about it every single moment that you're there. Now, of course, I was there for very few moments. I was only there for 11 days, but I'm letting you know, I flew Air Force One 3 times. I was in the Oval Office. I had the opportunity to be involved in this. I did a White House press conference. I stood at the White House press podium in the Brady press room and answered the questions from the White House press, arguably the toughest group of people that asked those types of questions. I was trying to help the president. And, listen, I did something stupid. I got myself fired. I never blamed anybody but myself. But I am very proud that I got Steve Bannon fired alongside of me. Very proud of that. I mean, the guy was an effing lunatic. I mean, imagine Trump and Bannon in the White House during a pandemic. I mean, people don't realize how much havoc we saved.
What did you think about the note from the White House about digital assets and crypto? Do you think America can be a leader in this area?
We should be. Mm-hmm. I think this is a missed opportunity. When they reject the Grayscale Bitcoin trust and there's a 35% discount and all of this sort of stuff, I don't understand what they're doing. It's too much politics for me. It's too much left thinking or right thinking and not enough right or wrong thinking. Can we get there? Yes, I do believe it will get there. But you've got guys like Sam Bankman-Fried operating in the Bahamas. He can't operate here. There are trades that I see, but because I don't have a bit license here in New York, I tell my staff, well, we can't do that. We don't have a bit license. We could move everybody to the Bahamas and then we could do those things, but I can't do those things here in New York. And so I think that's silly. And I think it's going to cause a capital flight crisis, an intellectual capital flight crisis. I think it's unnecessary. But here's the thing, when new things are happening, people get scared. No regulator, no politician wanted Uber. They didn't want it. And you could go read all the passages and all the hassles that Uber had as it was trying to develop its business. But who wanted Uber, Scott? The people. The people wanted Uber. Okay. And so the people, luckily in a pluralistic society, a democracy, whatever its flaws are, the people speak. And I think the people want to be involved in the cryptocurrency markets. There's 73 million accounts here in the US. I don't know what the number is in Canada, but it's a big number. How are the politicians going to avoid it? Politicians are in marketing. They're marketing competitions. What are they going to do? They're going to alienate the entire cryptocurrency owners in the United States. I don't think they're going to do that. But it's not moving. It's not moving as quickly as it should be.
Mm-hmm. No, I definitely agree with that. And we need America to be a leader. The world needs America to be a leader, I think, in Bitcoin and crypto for sure. Let's talk about Sam Bankman-Fried for a bit. Some people have called him the Jamie Dimon of crypto. Some people have called him the Warren Buffett of crypto. You have a relationship with him through your SALT conferences. Tell me about SBF's importance to crypto and digital assets.
Well, I think, don't go by me. I think Cointelegraph who said that he was the most influential person in the cryptocurrency industry. I think CZ is also very influential. Binance is in some ways a larger business than FTX. I think where Sam becomes very influential is that he's willing to be a teacher. He's willing to be somebody that will sit with the politicians to explain what's going on. And I think that's very helpful. And I think he'll be somebody that helps to usher the new world. I think the politicians find him unintimidating, which is good for the industry. And I think he's done some very smart things for the industry. He's been willing to backstop and provide credit support at a time where people got over-levered. In 1907, there were these new technologies called the railroads, and there were a big burgeoning steel industry as we were creating a rail system over the continent of North America, Canada, and the United States. And a result of which it caused a boom-bust cycle, right? Over-levered, the railroads imploded, the steel industry imploded, the banks got caught in that, and they were desperate for capital, and the banks started failing, and we had the panic of 1907. You could read the book about it. There's a great book on it. And John Pierpont Morgan, the original JP Morgan, stepped in as a private citizen, owning a private bank. He was well capitalized relative to the others. He stepped in and he cleared the capital markets to allow capital markets to flourish. And it was a crisis of liquidity. And that's what's going on right now in the crypto markets. And so Sam has taken that role. And I think he's wise to do that because I think it will lead to stability. And I think it'll lead to regulatory confidence that there are elder statesmen, even though he's a young man, but thinks like an elder statesman that's providing this type of support.
Mm-hmm. How do you see stable coins playing a part in our future?
I think they'll be probably the biggest part. Ultimately, you're going to be at a restaurant in Toronto or someplace, and you're going to pay for your meal probably with a stable coin. It'll be linked to the Canadian dollar, and you'll have your smartphone out. You'll say to the waiter, "What's your wallet?" And he'll tell you, and it'll come back, and then you're done. And then the 3% charge that once went to Amex or Visa or MasterCard is gone. And that's a cost savings for both you and the restaurateur. And I think that that's the thing people are not getting. If I told you that we could disintermediate most third parties out of transactions, if you were interviewing Sam Bankman-Fried right now, he would say, well, there are 7 intermediaries between you selling your stock and me buying that stock. It's going through this broker and that broker, the Depository Trust Corporation. And before you know it, the reason why it's T+2 or whatever it is it takes time for that to happen. Over the blockchain, those things could cross almost instantaneously. Okay, that's the magic of the blockchain. The blockchain is an ability to delayer the entire economy, to eliminate these third parties and eliminate the permission associated with these third parties. So stop and think about that for a second. That has a gigantic economic efficiency. It'll allow for more cost savings. You know, this call that we're having right now, I don't think we could have done it in 1985. Maybe there was television and teleconferencing in 1985. It would have been very chunky, very, very hard, very choppy. I don't know if we would have the bandwidth or the data to provide it. But my guess is it would have been very expensive. But this call is virtually costless now because we're both hooked up to internet and Wi-Fi, and we're able to have the call. Go back to 1985. I had my backpack. I was traveling through Europe. My mother made me call her on Wednesdays because that was like Prince Spaghetti Day. That was a time you had to call your Italian mother. And so on a Wednesday, I would have to stop wherever I was in Europe and call my mom. Well, I didn't have a cell phone, and the pay phones, you couldn't make an international call. So you'd go to the post office. You'd wait online. I'd take out my American Express traveler's checks, and I would convert them into lira. And the Italian postal clerk would say, go to booth number 4, wait for the phone line, and you could pick up the phone and call your mother. And so I would go do that. I'd give them $15. They'd allow me to talk to my mom for 5 minutes. I probably lied to her, told her I didn't have venereal disease. I wasn't getting drunk all over Europe. I was probably lying to her, but I got on the phone with her. Hey, Ma, I'm okay. $85 to make a 5-minute phone call. I hung up the phone. I left the post office. I got off the line. Okay. Now, today, 37 years later, do I have to wait on a line at a post office to call my mom? I can go to any cafe in Europe, hook this up to the Wi-Fi, and make a wireless, costless call to my mom. And so this, we have these technological advancements. And so the blockchain is going to advance us like that. And so you want to miss it. Okay, miss it. You had a divot, lots of leverage, boom bust cycle in the railroads, boom bust cycle in the horseless carriages, boom bust cycle in Web 1. Okay, I got it. You want to miss it because of that, miss it. I'm not missing it. I'm going to stay in the game, locked and loaded on the target to grow the business and to impress upon my clients how important it is for them to be a part of it.
Jack Mallers talks about dematerializing those intermediaries as well with his development of the Lightning Network. Can you comment about the Lightning Network?
Well, yeah, I think, listen, the Lightning Network is brilliant. If you had Michael Saylor on, I think he would say to you that Safadane Amos, the author of the Bitcoin Standard, I think he would say to you that Jack Mallers and Elizabeth Starks and others that are working on the Lightning Network are going to lead us into the future, that Bitcoin will become the standard. These other coins will have use cases and there'll be smart contract overlays on them, which you can use. But Bitcoin, it'll be Bitcoin. That'll be the standard because of the Lightning Network.
Outside of Bitcoin, we have Ethereum, Solana, Polkadot, Internet Computer. You've kind of planted your flag around the Algorand camp. Can you talk to me about Algorand? What about Algorand piqued your interest?
Well, I mean, Algorand has amazing technology. When the main net went up, it's never cracked. They sluiced through billions of transactions, never cracked. It has a net negative carbon footprint. It's almost costless to transact on the network, unlike Ethereum where the gas fees are high. And so I look at Algorand and I say, okay, this is something that's so stable. The technology is so smart that you could really build big businesses off of this technology. Now, the problem that Algorand has had is I think that they put it in the hands of loose holders when they had their first coin offering. And I don't think they did a great job of marketing it. And so, what I'm hoping will happen is what happened to Apple. And just to remind everybody, Apple had better technology than Microsoft, a better operating system, and yet it didn't emerge because Microsoft was the Ethereum of its time. It was bigger and it was broader, and all the software was being developed on Microsoft. It wasn't until there was an innovative breakthrough with the iPod and eventually the iPad and the iPhone that Apple found its shining moment. So I'm hoping Algorand can get there. It needs to build that community. But I am unbelievably impressed with the technology, and we have a big position in it.
Anthony, I think of you as a real leader. You know, as I did some research for this interview and learned about your history and the ride that you've been on, you know, basically a kid from Long Island, then working at Goldman Sachs, and now you have a really long list of accomplishments, you know, some of which I mentioned at the beginning of the interview. What are some leadership tactics that you learned coming up that you think are important and still used today?
Well, I mean, listen, I don't want to oversimplify things, and it's flattering of you to call me a leader, but I think one of the things is stay humble. You don't know everything. You're not the smartest person in the room. Listen. And I think for me, I tell people be focused on the right pronouns. You know, you want to be the person that talks about the we and we're doing it together. You know, people work with me. They don't work for me. You see the distinction? Because if they're working with me, then they feel collaborative. If they're working for me, then they feel like they've got to wait for my orders. I don't want to be that leader. I want to be a servant leader. I want to have people work with me. This way I can run the SALT conference, run a Bitcoin fund, run a fund of funds, raise some money for some politicians that I like, and run my family, or try to run my family. My wife runs my family, but you get the point.
Yeah.
Do all these different things because I've got a group of people doing those various things. Does that make sense?
Totally. No, that's great, man. I'd love to end the chat with a plug for your podcast. It's very diverse. It's very interesting. You always have a great guest lineup, and you genuinely seem interested in the people that you're talking to. So big shout out to Mooch FM and that podcast.
Hey,
I think you do a great job.
I appreciate it, Scott. It's fun for me. I like doing it. I like interviewing authors. I read a lot of books.
How can people get connected with you and learn more about what you're up to and follow you?
You know, I'm at Scaramucci. At Twitter, you can go to scaramucci.net. You know, I try to post there, and I have some publications. I don't know how to use Instagram, so I'm showing my age, but I'm going to start developing myself more on Instagram. That's my focus for the back half of the year.
From the bottom, ain't no half stepping. I'm the dog, I made it through so they don't ask questions. Long Beach, and it ain't no half repping. Once a dog, always a dog, so they don't ask questions.